Hey, welcome back to my channel. Today, my name's John Mazzara, Remax Results. Today, I have with me Ivan Oberon. We're going to speak about super jumbo loans. But before we do, a little bit more about Ivan. He works with Edge Home Finance and his company, Your Kingdom Lender. Ivan, tell us just a little bit about yourself and what is a super jumbo versus a jumbo jumbo?
Sure. Thanks, John. And hello, everybody. Great to see you again. And again, Ivan Oberon with your Kingdom Lender. I've been in the business for well over a decade. Started on the investment side of things, raising capital and doing fix and flips investments, and until I eventually tied in with good institutional private capital, and decided I could add a lot more value to a lot more people by being able to help our consumers and real estate agents and create some great partnerships that way. And we like to be well resourced. I don't like to say no. Although as an entrepreneur over the course of my career, sometimes you have to hone in and focus, right, John? It's kind of like different things come, and oh yeah, sure. I mean, if somebody has this need, somebody's going to do it. Why not me? But I've learned that sometimes you end up chasing your tail for too long, even though you might meet some good people along the way. So over time, you take that shotgun approach again, and you whittle it down a little bit more to more of a sniper approach. And my primary focus it became residential real estate. Anything to do with residential real estate, whether you're buying it for your first time, you're going to develop it and build it, you're going to build apartments, you're going to rent it, you're going to flip it, whatever you're going to do. And of course, there's a variety of different types of purchase prices and needs for different clients. And where I live in Southern California, of course, you realize that there's access to a lot of very expensive property. And sometimes it's very hard to not even, you almost have to be a dual income household for some of these price points where when a condo is going for $1 million, and it can get pretty tough. So one thing that's been good in our industry that's been happening from the feds and the powers that be is our conforming loan limits have been increasing a little bit every year, right? So now we got just the release of the new increases for the conforming loan limits, and that's a good news for the majority of the population, because that means that the loan amount can be a higher amount before it ticks over into jumbo. And when it does tick over into jumbo, guess what? The investors see that as a little bit higher risk. So the qualifying guidelines and parameters start to tighten up a little bit versus conventional FHA and VA. So the initial jumbo loan is anything that's above what they consider your high balance conforming. Because you have conforming, which is about 760. You have high balance conforming, which in our areas and other considered high value areas would be roughly a 1.1 million is your high balance conforming limit, and then anything above that would be your jumbo. And most jumbo lenders lend up to and between $2 million is generally the cutoff for most traditional jumbo lenders. And some will push up to 3 million, 4 million. A very rare few will go up to 5 million with certain qualifiers. But again, we have even bigger values here. So we have programs that will actually go up to a $30 million loan amount,
Wow.
and which is pretty impressive. And one thing that might surprise some people is that you see a lot more cash buyers in the jumbo and super jumbo space than you do anywhere else.
Hmm.
So hey, here's this. I have this $3 million listing. I have this $4 million listing. I have this $5 million listing, and here I am as a independent broker trying to add value and do my thing. And these agents are just like, it's a cash offer. It's a cash offer. I was like, how is this even possible? So what we always like to do is we like to lean in through an educational approach. And that's just not good enough, because for me, if you have that kind of money down, you're wise and savvy, and you know what you're doing with your money, you would think. So anybody would know that your primary residence really is not an asset. It is, and it could be argued. Of course, you have tax advantages, you have different things, right? But in my opinion, from an investor standpoint, is anything that takes money out of your pocket is a liability. Anything that puts money in your pocket is an asset. And we all know that your home only takes money out of your pocket, even if you have your silent appreciation and your wealth is growing, which is great. But as long as that equity is in your house, what good is it?
Hmm.
So that's why I'm also not a huge proponent of, hey, pay down your mortgage as fast as possible, because you want to make sure that you're not leaving that debt equity there. So the conversation becomes, okay, are you familiar with the delayed closing or the 90-day rule? And then we educate our real estate agents so that we can educate our clients on that 90-day rule. Because if you pay cash just to have a competitive offer, or do whatever you're going to do to reduce your costs, and then you do a refinance for any amount during that first 90 days, you will still be able, from the tax code, you will still be able to take full advantage of your income tax deductions for your mortgage interest and things like that. If you wait too long from that initial cash purchase to recapitalize some of your funds through a cash out refinance. Really, we call it delayed financing because it's a little bit better pricing, right? They price it like a rate and term refinance versus a cash out refinance, which is the riskiest type of refi. So the pricing is still better if you do it within that period of time. They call it a delayed purchase. Now we recapitalize some of that debt equity. So then guess what? Now you can take some of that, you can buy that rental property. You can put it back into your Edward Jones. You could do all these different things that if you have two, three, four, $5, $6 million cash to pay for a property, more than likely you know how to get double-digit rates of return on your money, which
Hmm.
you can't do if that money is stuck in your house. So that becomes part of the education process. And but the point is, if you're buying a super jumbo loan, don't think that you have to pay cash. We have options for you all the way up to $30 million. Now, what is the difference for qualifying? There's a couple little quirks that we'll get into, right? Once you go from high balance conforming to jumbo, the first thing is that your debt to income qualification factors will typically get cut down from 50 to 57% on FHA, all the way down to 43%. Okay, that's going to be like your general. So again, you're going to have to show more stability in your income and all that kind of stuff once you're in a jumbo loan size. The other thing is you're going to be required to show a certain amount of what they call post-closing reserves. What does that mean? Well, the money that you still have left over in your cash accounts or your retirement and investment accounts after you've done your down payment and paid all your closing costs and prepaids and all that kind of stuff. Right. So the money you have left over, most jumbo investors want to see 12 months of post-closing reserves. Some we can get more aggressive and maybe 6 to 9 months and et cetera, right? But just a good rule of thumb is 12 months to get the best options and the best pricing out there. So that can become very challenging for many people too, because on the conforming FHA, you don't have to really show any reserves, right? So that's where the qualifying factors differ, and why it's really helping a lot of people that are conforming loan limits keep going up. Those are I would say probably two of the main characteristics. The other characteristic is, of course, on a jumbo loan, you don't have down payment assistance programs, right? They figure if you're buying in this price point, you're probably doing okay, and you don't have those low down payment options either. Generally, with jumbo loans, you're going to be at 20% down. And once you start getting into super jumbo, you're generally going to be at 30% and more down. But it still beats paying 100% cash.
Absolutely. Now, can you do this with a second home?
Yes, you can do it on a second property. Yep.
Okay.
But
So,
not an investment property. It still has to be technically an owner occupied, secondary residence or whatever, but you can do it on a secondary.
okay. In Minnesota, we're called the land of 10,000 lakes, but we actually have over 15,000,
Mm,
real number. But there's a lot of lake properties. There's a lake called Cross Lake. There's a lake called Lake Minnetonka that's local
well, sure.
here. And there's some guy, I forget what he did, but he bought the Pillsbury property and tore
Oh,
it down. And did you hear about that one? It's like
no, I
50
haven't
million
heard.
bucks or something. There's a like monster home out on it's like
Wow.
a sprawling home. It's not one home, it's like 20 homes together. Anyway,
Wow.
so there are some big properties here in Minnesota, but they're primarily on lakes, and the metro lakes, or up north on some of the more popular resort areas. So somebody watching that has a second home, that maybe wants to free up some of that capital, because you can do this on a cash out basis, correct? On a
Yes,
super jumbo.
sure.
So they got a $2 million home on Cross Lake and they want to go ahead and take out whatever ratio they're going to be eligible for, they could do that. And I know
Absolutely.
that's a problem with a lot of lenders. They won't give you that much cash, but
Right.
your lenders could give them that much cash.
Yes, and some of my guys are limited to as much as $2 million cash out.
Okay, that's, yeah, that wouldn't be a problem probably in most properties in
Yeah.
Minnesota, but yeah,
Yeah.
interesting. So
And it's another cool thing for that specific demographic that I think many people just don't give them the education that they need, because maybe they go to just their financial advisor or whatever, and they can be very limited in what they can actually offer.
absolutely. Yep, absolutely. You can only offer what you can offer, and a broker can offer or find it. So that's the advantage of working with a broker, and Ivan has many, 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 as you can tell, resources. So if you have a problem and you have good credit, and you need some solutions, he's going to do his best to try to solve it for you.
Yeah, good credit for the jumbo and super jumbo. You don't have to worry about having good credit if you're just your typical, hey, I'm a first time home buyer. That we can go to five 500 on a credit score, right? So, but certainly when you're in this level, everybody's got to play at that higher level.
Sure, absolutely. Awesome. Another great product, Ivan. Thank you for sharing. Anything else you
So,
want to add to the video before we wrap her up?
no, that's good. Just let's strategize and see what we can do with your new homes and investment properties.
Wonderful. Thank you for coming today, Ivan. And all of his contact
Thank you,
information
John.
will be down below the video.